We have the right person at the right time.
So I come from a family of CAs, so we are all in this profession.
With the new union budget being announced, what are the changes?
Every budget, that's come out, I can only say one thing. The poor get subsidy, the rich get rebate, and the middle class is only left to debate.
Wow! I would like to deep dive into changes made in the budget.
This change came on 23rd July. So the confusion here in the mind of the audience is this good for me or bad for me? This is a very difficult question to answer because, please remember, when the government gives you something with one hand, it always takes something with the other hand.
How does one efficiently invest?
Real estate, my friend, doesn't grow as per your inflation rate. It grows much faster than that.
What are the tax implications as an NRI?
NRIs are taxed differently.
There is a lot of debate around this, right?
Of course.
Whether it's good or...
There was this member of parliament who's also a chartered accountant. So he had made a point saying that it is bad. And then I'll give you another example, tell you why it is good. And then the audience will tell us that, we now understand why it is good or bad depends on this factor.
Hi everyone. What comes to my mind today for today's episode is that we have the right person at the right time. Today we have CA Vineeth Suresh with more than a decade of experience in various sectors, including real estate. So Vineeth, if you could tell us a little bit about your journey.
Hi Megha, and hi to your wonderful audience out there. So I cleared my CA and started my practice in 2014. So it's been a 10-year journey in the profession of being a chartered accountant. So I come from a family of CAs. So it was my grandfather, Mr. Shekhar, who was the first CA in our family in 1949.
Wow.
And after that, my dad, my mom, couple of my uncles, my brother, my wife, and even a cousin sister of mine. So we are all in this profession. We have 2 offices in Hyderabad. We have some presence in Bangalore and Chennai as well. And that's about it. And our firm name is Shekhar and Suresh. We cater to a large variety of clientele, including real estate. As you can see, real estate has really boomed in Hyderabad for the last 8 to 10 years. So naturally, we have a lot of clients from that sector.
Yeah. I mean, I can't think of a better guest for today's episode with the new union budget being announced and,
True.
Just to, give clarity to our audience today and to give them a knowledge of what we can do to, save taxes and what are the changes that has come into picture.
Absolutely, I know. Right. So Megha, every time a union budget is announced, the first thing that everyone asks is what's in it for us?
Yeah.
So it creates a sense of excitement among all the various classes. But every budget, that's come out, I can only say one thing. Each budget that comes, the poor get subsidy, the rich get rebate, and the middle class is only left to debate.
Wow, this is what you've just said is just amazing.
But yeah, there are a number of things. I wouldn't say there are too much of reliefs for the people as such, but the government has consciously tried to simplify and rationalize and make life easy for everyone, because Albert Einstein once said that I can understand anything but not income tax.
What I would like to start with, Vineeth, is if you could throw some light on long-term and short-term capital gains.
Now, if you hold a property, land or building for a period of more than 24 months, it is treated as a long-term capital asset. And if you sell such a property, the gain that you make on that is a long-term capital gain.
Right.
And if you hold a property for less than 24 months and sell it, the profit you make on that is a short-term capital gain.
Okay.
So, with regard to the gain as such, there has been a major announcement, major change in the taxability of long-term capital gains. The short-term capital gain on immovable property, real estate hasn't been touched. What has been touched is the long-term capital gain taxability when you sell a property, land or building, or both. So what has happened is earlier there would be a tax rate of 20% on the long-term capital gain on the property that you sell. Now that has been brought down to 12.5%.
Right.
But please remember, when the government gives you something with one hand, it always takes something with the other hand. So they have effectively also mentioned that the concept of indexation, which was there in Section 48 of the Act, that has been effectively removed. So therefore, you wouldn't get that benefit of indexation, but your taxability is only 12.5%.
Okay. So, like talking about indexation, and I'm sure there are a lot of other changes also, right, in the announcement. If you could tell us what it was before and the changes that were made. A lot of people are not aware or maybe don't have clarity on the changes.
Right. So, I don't know if our audience will have the the patience to listen to this, because it is a slightly time taking. So I'll make it as short as possible and try to effectively convey the change. This change came on 23rd July. So so this new logic of taxing at 12.5% without indexation. So what will happen if Megha, who has purchased a property for say 10 lakhs in 2004, is going to sell that same property in 2024, that is after 20 years. समझो say 10 lakhs का property, you're going to sell it for say 1 crore, like example. So what is the gain that you make is 90 lakhs, right? Earlier, the rule was that you could inflate this cost based on the inflation rates and an index number that would be released by the government. So earlier, before this budget, Megha would sell the property for 1 crore. She had bought it for 10 lakhs in 2004. That would be indexed. So 10 lakhs would be indexed, and it would be indexed by say 3 times, 3.5 times. The last index number that I remember is 363 by 100 being the base number, which means 3.6 times.
Got it.
So what would happen is Megha would tell the income tax department that, look, I have sold this property for 1 crore and my cost is not 10 lakhs. It has been indexed because of inflation, time value of money. 3.5 times of 10 lakhs is 35 lakhs. So what you would do is, you would say my sale is 1 crore, my indexed cost is 35 lakhs, and your gain would be 65 lakhs, which you would pay 20% tax on. So 65 lakhs into 20%, our audience can calculate, would be around 13 lakhs of tax you would pay. This is what the old regime, that is before this new change that was announced. Now, because of this new change, what Megha has to do is, she has to tell the income tax department that, look, I have sold it for 1 crore. I have bought it for 10 lakhs in 2004. But the budget has said that you cannot index it. So you will have to take your cost as 10 lakhs only. And you will have to declare a profit of 90 lakhs.
Got it, the difference amount.
Yeah, the difference amount. But the advantage is the tax rate, 90 lakhs ke upar, you will have to pay only 12.5%. So 12.5% of 90 lakhs, if you see, 12 nines are 108, 10 lakhs and 0.5, around 10 to 12 lakhs of tax you're going to pay. How much tax you paid was around 13 lakhs in the earlier example, and now you're ending up about 11 to 12 lakhs of tax. So the confusion here in the mind of the audience is this good for me or bad for me? This is a very difficult question to answer, because it doesn't depend on what the tax rate is. It doesn't depend on when did you buy the property. It depends on what you're selling it for. I'll give you an example where I can say that it is bad for you, and I'll give you an examples where I can prove that it is good for you.
Okay, I think that there is a lot of debate around this, right?
Of course.
Whether it's good or bad.
So recently in the parliament, in the Rajya Sabha, there was this member of parliament who's also a chartered accountant. So he had made a point saying that it is bad.
Okay.
Right? So I'll borrow the same example and I'll tell you why it is bad, and then I'll give you another example, tell you why it is good, and then the audience will tell us that, we now understand कि भाई, it is good or bad depends on this factor, and what is that X factor will be revealed after the example. So quickly let us take one example. Say you're in Delhi. So you bought a house for 1 crore in Delhi in 2001, and today you're selling that same house for 4 crores in 2024. No indexation benefit. New rule applies. You're selling it for 4 crores, you bought it for 1 crore, your gain is 3 crores, and you're paying 12.5% on 3 crores. What is 12.5% on 3 crores is 37.5 lakhs. So audience, remember, 37.5 lakhs is the tax in the new rule, right? Same property in Delhi, 1 crore ke liye I bought in 2001, sold it for 4 crores in 2024. Old rule applies. Let's take the old rule. So old rule gives me an indexation of 3.5. So my cost is indexed to 3.5 crores. 4 crores minus 3.5 crores is 50 lakhs. 50 lakhs के ऊपर 20% tax, old rule, I pay only 10 lakhs. So this example proves that the new rule is bad for me, because the new rule I am paying 37.5 lakhs, old rule I am paying only 10 lakhs.
Right.
This is one example that was mentioned in the
Very
parliament.
interesting. Yeah.
And many people said, yes, indexation nikalna is bad. But tell me, practically speaking, in Hyderabad, if I buy a property or a piece of land for 1 crore in 2001, Mega 2001, which is 23 years back,
That's quite a bit, no?
do you think I will sell it only for 4 crores in 2024? I leave that to the wisdom of my audience. I do not think. So the example that was mentioned in the parliament is logically right, but it is factually incorrect in terms of the 4 crores value that was taken. Please understand. So the example is fundamentally flawed if I apply it to the Hyderabad real estate, because in Hyderabad, something that I bought for 1 crore Mega in 2001, 1 crore was a huge amount. Those were times when petrol was 25 rupees a litre. Come on, right? So today in Hyderabad, something that was worth 1 crore, I can conservatively tell you, Mega, that you can sell it for 7.5 crores at the
minimum.
Let's take minimum. Let's not go to 10 crores and be very...
If possible, looking at the trajectory of the growth of real estate in Hyderabad.
I personally know somebody who bought an acre of land in Medchal, which on those days, Medchal was outskirts, right? And Kompally was another village, right? And today that is going for 15-20 crores per acre. I am not even going there. I am saying let's take 7.5. So let's apply the same example. 1 crore is the cost. I am selling it for 7.5. Let's apply the new rule now. 6.5 crores is my gain into 12.5%. Pardon my arithmetic. Approximately you will reach, you will be ending up 12% of 6 crores, you will be ending up paying about say 70-75 lakhs of tax. In the new scheme. 7.5 minus 1, 6.5 into 12.5%, approximately 70-75 lakhs of tax. Let us apply that to the old regime. 7.5 crores is the sale value, and the indexed cost I will be able to take in the old system. 1 crore indexed to say 3.5.
Right.
7.5 minus 3.5 is 4 crores. And on 4 crores, I paid 20%. 20% on 4 crores is 80 lakhs.
Yeah.
And in the new scheme of 12.5% without indexation, I am paying 72 lakhs. So I am paying 8 lakhs lesser. So the old rate will be better only when your sale value is very low. With full credit to the parliamentarian who gave this example, due credit to him. The error what I found in his example was, he took the inflation rate and took the sale value as 4 crores. But real estate, my friend, doesn't grow as per your inflation rate. It grows much faster than that. And it has in Hyderabad.
Yeah, yes, it has.
So, which is better, no indexation or yes indexation? It all depends on what value your land has appreciated.
Got it. Makes sense. Okay. So, say suppose I bought a property before 2001, right? There is some time that has been announced, like properties bought before 2001. Say, okay, 1960. My grandfather's transferred a property to me, and I want to sell it now, today, in 2024. What happens here?
Yeah, this is a nice question. See, here people feel that indexation is gone, so I have to take the same cost as what I bought it for. So the law in income tax is, if you are inheriting a property or somebody has gifted you the property, the cost to the previous owner is your cost. Say your father or grandfather has purchased a property in 1990 for 10 lakhs and you have got it by inheritance and you sell it for 1 crore. The rule is your cost is same as what their cost was, because you haven't spent anything to get that. So that's the rule. The cost to the previous owner is cost to the present owner in case of gift, inheritance, will, etc., etc.
Okay.
So under the new system where there is no indexation, 1 crore is the sale value, cost is 10 lakhs. Please remember that you can increase the value of this 10 lakhs. And it is not because of indexation, it is because of the fact that this was acquired before 2001.
Okay.
So properties which were acquired before 2001, you can take the fair market value as on 2001.
Okay.
That becomes your cost. Sale value minus that cost is your gain, on which you pay 12.5%. So property worth 10 lakhs in 1990, fair market value in 2001, that is your government value, sub-registrar value, whatever, say it is 20 lakhs. you can take 20 lakhs. That is not indexation. That is not indexation. That is allowed in law that the base year is 2001. So even in the new system of 12.5% tax without indexation, you can take 20 lakhs as your cost because it is the fair market value on 2001. 1 crore minus 20 lakhs, 80 lakhs becomes your gain into 12.5% again. You can't index it further.
Vineeth, assume that I've now sold my property. I think in short term, you're not allowed to invest in a residential.
Correct. You have to pay tax.
Yeah, correct. And say long term, right? Is it okay to invest in any kind of property or does it have to be residential?
So two things here. It has to be long-term capital gain only if you want to save your tax by investing in a property. If you have short-term capital gain on selling a property, right, you will have to pay tax. There is no scope to invest and reduce or claim any deduction. And even for property, when I say you'll have to invest in a new property, it is only residential property that you can invest. So when you make a long-term capital gain, that amount, if you invest in a property, then you get the exemption, provided that property is a residential property only. I can't sell my house and invest in a commercial complex and claim a deduction. That is not allowed. Removal of indexation has affected this, right? Has affected this part, and I'll tell you how. New situation of 12.5 without indexation, what happens is 7.5 minus 1, 6.5 crores is my capital gain.
Right.
On that I have to pay how much? 12.5%. Now I don't want to pay 1 rupee also as tax. How do I save my tax?
Right.
I am allowed to invest in another residential property, right? Within 2 years, I can either purchase or within 3 years, I can construct.
Okay.
That is the time that is
Got
given.
it.
So now this 6.5 is my gain. So I'll have to search for another house that is worth how much? 6.5 crores. I don't want such a big house. I'm okay with the 2 crore house also, 3 crore house also. But if I don't want to pay any tax on 6.5 crores, I have to invest my entire 6.5 crores on another residential house if I don't want to pay any tax. If I had done the same transaction before this new announcement of removing indexation and reducing the tax rate, I bought it for 1 crore. I would have sold it for 7.5 crores. I would have indexed my 1 crore to 3.5 crore. My gain would have been 4 crores. Right? So now I have to search for a house worth only 4 crores to save my tax on 4 crores. So therefore, on 4 crores, my tax is 20%, 80 lakhs. New situation, my tax is only 12.5% on 6.5 crores. Tax is only 72 lakhs in the new situation. It is higher or 80 lakhs in the old situation. So from a standpoint of how much tax I am paying, the new rule is good. But if I want to save tax, in the new rule, I have to search for a house worth 6.5 crores to save my tax completely. So that way, there is a burden on us today under the new situation where I'll have to invest more money on the new residential house to save my capital gains tax, which is a major thing. However, it doesn't apply to a situation where you are selling any long-term capital asset other than residential property. Because if I sell my house and I want to save capital gain tax, I have to invest only the profit in a new house. Right? But if I sell any long-term capital asset other than a residential house, right, I sell a piece of land or I sell gold or I sell any asset which is a long-term capital asset and I make a profit on that. If I want to save capital gains, Megha, I have to invest not the profit on that sale, but the entire sale value itself. Which means, in my example, I said I bought a house for 1 crore and I'm selling that house for 7.5 crores today. Instead of house, let us say I have gold or I have a commercial property. 7.5 crores I sold it for and I bought it for 1 crore. If I want to save my capital gain tax, Megha, I should invest not just the gain. I have to invest the entire 7.5 crore to save my entire capital gain tax.
So my next question on that would be, assuming I sold the property, I have a certain amount of capital gains, which I know the amount, right? Now, how do I plan that accordingly? I don't want to buy your house worth 6 crores. I don't want to do that.
True.
Now, how do I do that effectively? do I have no other option? Do I have to do that? Or is there another way that I can divide the investments in different things?
See, there are multiple options here. There is a section 54EC that allows you claim an exemption only up to 50 lakhs, where you'll have to invest in bonds, government bonds, rural electrification bonds, or National Highway Authority of India bonds. But there, the time frame given to you is within 6 months you'll have to invest, and only up to 50 lakhs.
Okay.
There are other sections where to encourage the startup ecosystem, you can invest in an eligible new startup business. Then you claim exemption from capital gain by doing that as well. There are options like investing in shares of an eligible company. So it's very simple, Mega. Whenever you look at exemption on capital gains, the reasoning is always to boost a particular sector of the economy. So the government wants to boost housing. That is why it says invest your long-term capital gain in any residential house, you'll get exemption. You invest in the startup, you invest in an eligible manufacturing company and claim deduction. So these are basically the avenues apart from your government bonds that I had mentioned.
Talking about tax deduction, GST. Now I want to talk about GST. What is the GST implication, say for a buyer and a seller?
See, Mega, it's very simple. If you're a buyer and you're buying a house that is not yet completed, then there is a GST rate of 5% that you have to pay to the builder, the person, whoever is selling you his unit. It's an apartment or a residential house or whatever it is. So usually there's only one way where you can avoid paying this extra 5% is you buy a unit for which the OC has come, the occupancy certificate.
Okay.
In simple language, it should be a completed unit. And usually the municipal corporation issues a certificate saying that this is ready to occupy, ready to be occupied. Such a unit, there's no GST of 5% because it is a completed unit.
Okay.
And I think we all know that there is no GST on land. So if I buy a residential plot of land, there is no GST. But if I buy an apartment or a residential house, there is GST of 5% that I'll have to pay. But if you buy it after it is completed, then there is no GST of 5%. It's also important that the timing of when you buy your house is very important. If you want to sell it after completion or you want to live in it. This is something that is a very crucial decision point. So if I want to buy an apartment and sell it to make money, I should enter into that project. I should invest in that project at a very, very early stage. But please remember, the earlier, the riskier also.
Yeah.
Right?
Yeah.
So that is something that we should know. And as a buyer, if I want to invest in a house where I want to live in, I should actually wait and see some degree of progress there. The law is very clear. Whenever you take an advance from your customer, you pay 5% of that to the government immediately. And here again, in case the builder doesn't own the land where he's building apartments and he's entering into a development agreement, say I'm a builder but I don't have land, but you have land, I take your land from you and we enter into a development agreement, which is a popular way of executing projects. So I take the land from you on development, we register something called as a joint development agreement, in which we agree to the fact that whatever I'm going to build on that, some percentage of the apartment square feet will be yours and part of it will be mine. And that way we execute an agreement. And then later there's something called a supplementary agreement, which I'll have to do with you. I mean, most of the established builders know this, but if anyone in the audience wants to know that if he wants to become a builder himself, what he has to do, this may be useful for them. So once the JDA is registered, then there's a document called supplementary agreement. Why do you need this? Because see, in the JDA, it's only written that Mega will get 35% of the apartments and I will get 65%. But which are those apartments? Is it going to be the A tower or the B tower or the C tower? Is it going to be the first floor or the 5th floor or the 10th floor? We don't know. We only know that this will be the percentage of sharing. The supplementary agreement is a document where we actually earmark the unit.
Which one?
Which will go to Mega, which will go to me, which will go to the landowner, which will come to the builder. And again, you'll have to mortgage a few units to the GHMC. That's a rule. And then based on that, the whole project takes shape.
So say I am selling my property.
Yeah, as a landowner.
Yeah, as a landowner. What GST applies to me?
5%. So on your apartment, it's always 5%. But the law is here slightly, you'll have to...
As a seller also it's 5%?
You are the landowner who has 35% of the apartment, right?
Yeah.
And you got a customer and it is your apartment. So it is up to you whether you want to sell or no, correct? So he will obviously come to my sales office because project is being managed by me. And he will come and say, I want this apartment. And I'll be like, hey, this belongs to you. Then I'll be telling you that, see, this is the price that we are selling at everyone, to everyone. Your apartment also has an inquiry. Are you interested? So as a landowner, it's up to you, right? You can say, no, I want to keep it.
As an individual though, say I have an apartment, I've lived there, now I want to sell it, resale. Does GST apply to me as a seller?
It doesn't, because it's a completed unit, no?
Okay.
So as a landowner, what you do is, you collect the 5% from the buyer, that 5% you pay it to me, and I pay it to the government. It's slightly a different route. If it is an apartment which is being bought by a customer out of the landowner's share.
Got it, makes sense.
So he pays 5 rupees to you on 100, you pay that 100 to me, I pay it to the government, and we all file our GST return so that there's no double payment of that 5 rupees.
Got it. So Vineeth, a more generic question, right? There are 3 major modes of investments right now. It is your equity, gold and real estate.
Correct.
What do you think we should go with right now?
Oops, I didn't know that question was coming my way. See, I'm not a qualified investment advisor because I myself have made investments. Some of them have paid off, some of them haven't.
Okay.
So I don't think there's anyone in this world who can say that I am the guru of, at least I can't say that. But what I would like to say is we can link the changes in this budget.
Okay.
And try to see how we can use that to make a wise investment in all the 3. To be frank, gold, equity and real estate, all the 3 have been fabulous in terms of the benefits that they have given. There's no 2 views about that. So what I would say is, say in this budget, Megha, the government has reduced the customs duty on gold to 6%.
From
15.
From 15.
A steep fall.
Yeah.
So what happened because of that is there was a sudden fall in the price of gold, right? And the government also increased short-term capital gain on equity from 15% to 20%, right? And under section 112A, it increased long-term capital gain from 10% to 12.5%. This again impacted the stock market, and there was a reactionary fall in the stock market. Not a very, very large, but a reactionary
like a marginal fall.
And coming to real estate also, the stock prices of DLF and Godrej fell because of removal of indexation. The immediate reaction was.
Okay.
So all the 3 sectors took a slight hit because of the budget, but now they're back. It's a matter of a week's time and they're back. Now the point is, how do I as an investor try to dabble around these 3 avenues in the light of the Union Budget 2024? Say I am a person who wants to buy a house, but I don't want to buy it right now. I want to buy it after 2 years. I go to a gold shop, buy some gold, by check of course, keep it with me for 2 years. Now what happens after 2 years? It crosses the 24 months threshold and becomes a long-term capital asset. After 24 months, I sell it. I invest the entire money that I received for gold in a house, right? And I invest in a house that is announced, permission has come, and the construction has just started.
Right.
So what is happening? I am encashing the fall in gold today. I am encashing the investment in another residential property after 2 years.
And my
I save tax on the profit of my gold.
Yeah.
Right? And I invest in a residential property which is under construction, which has just been announced, subject to all the permissions and everything being in place. So I am entering into a residential property at a lower rate. I am saving tax on the gain that the gold has done for me. And I am gaining on the gold also. So this is one idea. Say ultimately I want to buy a piece of gold. I shouldn't start with gold. This is my logic. I can be terribly flawed. I can be 100% wrong. I am not claiming that I am right. But I look at it like this. If my end purpose is to buy a house, I shouldn't invest my money in a house right now. I should go through gold or the stock market and then enter into the housing space after 2 years, because there I save my capital gains as well.
Right.
Okay. If my end use is gold and I have a very good opportunity to invest in an under construction project at a very good rate because of fall in real estate prices in some part of the country, I do that, right? And when it appreciates after 2 years, I sell that house, and with that I buy gold.
Gold.
Maybe I want it for my daughter's marriage after 10 years or 15 years. So what is your end use? Try to link that to the other two avenues, and that's how you go about it. But if you want to save tax and still make money, buy gold or buy stocks, hold them for 2 years, sell them and buy a house, so that you don't pay tax on the gain of that gold or the gain of that stock.
This is very, very interesting,
Yeah,
Vineeth, something that I wouldn't have thought of at all.
Yeah.
But isn't there anything else?
There is another, just the other day I was telling a friend of mine, he was asking me that for equity we have mutual funds. For gold we have these gold bonds. The gold bonds are a very good tax saving and investment avenue. What about real estate? Why don't I ever hear about something like that? There is. There is a concept called REIT. REIT. It's called Real Estate Investment Trust.
Okay.
Right? So there are about 3 to 4. I know for a fact that Mindspace is one, and there are 2 more. And what they do is, it's like they manage large thousands and thousands, lakhs of square feet of property.
Okay, like how Mindspace is here.
The entire property is taken care by them. You invest in their trust and pick up units, like how you get units of a mutual fund. You get units of the REIT, the Real Estate Investment Trust. These units derive their value from the value of the square feet in which the money is ultimately deployed in. This concept is called underlying asset. Now, if I have units of a mutual fund, say BlackRock or say Aditya Birla, Sun Life, right? What is giving value to my units maker? What is giving value to my mutual fund units is the fact that that money is ultimately deployed in a number of sectors like Reliance, right?
Yeah.
Adani, any other industry, Tata, Infosys, software, infra, whatever. Similarly, the money that you deploy in a REIT unit is ultimately deployed in a commercial space. So the unit derives its value, mostly commercial. It can be residential as well. And the thing to be noted here is the government has given certain relief in this budget for REIT units.
Okay.
Earlier, a unit in a real estate investment trust, in short REIT, I'll have to hold it for 36 months and then sell it for it to be a long-term capital asset.
Okay.
Then invest that whole consideration in a residential house to save my tax.
Okay.
Today, that holding period of 36 months has been brought down to 12 months.
Okay.
That means they have brought a parity between a unit in a real estate investment trust and a unit in the stock market.
What is the minimum amount that, suppose that I want to put in it, what is the minimum amount?
Last I read about it, about 10 to 15,000 rupees.
That's about it?
That's about it. Even a small, middle class families, a person who just started working, all of them can invest in this real estate investment trust. But again, I want to give the same disclaimer what you hear all the time. Please read your documents carefully before you. Yeah. So that avenue is there. And one more thing is, there's this concept called virtual space. Virtual space is where one company buys a huge commercial complex that has about 5 lakh square feet or 10 lakh square feet, and you're allowed to invest in 200 square feet, 150 square feet, 250 square feet. There are a number of such products that are there, right? But why I call it virtual spaces, you really can't see where your property is.
So you don't know which 200
Which part of the building belongs to you, you wouldn't know that. But what I've heard and what I've seen is they do pay your rentals, quite good returns, the IRR, what they call. And then they also assure you of an exit or a buyback. But again, huge disclaimer. See, these new products which have come into the market, they don't have the kind of performance background that gold or real estate or equity stock market has. So if you ask me, should I invest in this? I would say, see, this is what it is. It's up to you to take that risk, evaluate everything, meet your CA, meet your auditor, take financial advice, do a due diligence, and then do the investment.
So Vineeth, is there a way that we save taxes through the property tax that we pay?
Yeah, of course. Yeah. So what happens is it's taxed as house property.
Okay.
The head of income is called house property, where if you're earning rent, there are 2 types of deductions that you take. One is the property tax paid by you and the standard deduction of 30%.
Okay.
So if I'm earning a rent of say 5 lakhs and I pay property tax on my property of say 15-20,000 or 50,000, that 50,000 is eligible to be claimed as a deduction from my rent.
Okay.
And a further 30% deduction is also allowed. And then you pay tax on the balance, because you can't say that, I repaired my house, I did this, I did that. So the law says just take 30% standard deduction and property tax separately, and whatever is left, you pay tax on that. There is an important change in the budget, Megha, is that rentals per se, there are many people who claim their rentals as a business income and not as a income from house property. Income from house property is a particular classification, a particular head of income, where if my rent is say 10 lakhs, all that I can do is reduce my property tax and take a 30% standard deduction and pay tax on the rest. I cannot claim any further expenses. So this is not very, very, very lucrative for a taxpayer, because somewhere deep down he knows that on whatever rent he is earning, he has to pay tax on 70% of whatever he is earning. Now the amendment has come in section 28, where it is very clearly mentioned that any rental income that you get, you have to show it as income from house property only.
Even if it's a commercial
Even
property?
if you're doing Airbnb or house is given to rent, anything. Commercial, residential, whatever rent you do.
Even if my property is a commercial property, I have given it out.
Yeah, it is house property. You can claim only 30% relief and pay tax on 70%.
What are the tax implications, say, as a seller or a buyer as an NRI?
Yeah, so NRIs are taxed differently, even when it comes to TDS. So if I'm a resident and I'm selling my property, and if I'm an NRI and if I'm selling my property, there's a difference. So the buyer has to do a higher rate of TDS when he's paying money to an NRI, when he's buying property from an NRI, right? So when an NRI is buying a property, there is no significant difference between him and an Indian resident. But when an NRI is selling his property, the buyer has to do a higher rate of TDS under section 195, which is 20 plus surcharge and cess. Huge rate of TDS has to be done. So one way for NRIs here is, before they enter into any deal, is to go and get a lower rate of TDS certificate. The department gives you a form, lower rate of deduction for TDS. If you get that form, then whatever rate is mentioned in that much TDS the buyer will do in case he is buying from an NRI.
Got it. Okay, so now say I'm buying a property for the first time. Is there a change in any of these structures?
There's no change.
In terms of tax or anything?
See, when you're buying, there's no tax except for the stamp duty that you pay, right? For first time buyers under affordable housing, the government had introduced a section 80EE, which was later removed, and 80EEA was substituted, but the concept is the same, where you get an additional deduction on the interest part. Right? If you've taken a loan for buying your house for the first time, and it is affordable housing, so it's not very expensive houses, I think 45-50 lakhs is the cap, and you're taken a loan on that, you are already entitled to a deduction of 2 lakhs for interest on housing loan. By default, you can take that deduction. In addition to that, under 80EEA, if you're a first time buyer, you get a further deduction of 1 lakh. So if my interest on my bank loan for the house loan, say, is 3 lakhs, I can claim 2 lakhs under section 24B, right? And another 1 lakh I claim again under 80EEA, provided the loan was taken between financial year 1920 and financial year 21-22. After that, this deduction is not applicable for loans taken after that financial year 21-22, simply because the government introduced a new regime of taxation with much lower rates of tax, where they said that you can't claim any deduction, but you take lower rates of taxation.
Got it.
Except standard deduction of 50,000, which has now become 75,000 in this budget, I cannot claim any deduction like ATC, LIC or anything, and pay under the new regime, which is lower rates of tax.
So can I claim my stamp duty that I paid during my income tax returns?
Yeah, you can, but you can't claim it as an expenditure and immediately claim any relief, Megha, but it gets added to the cost of acquiring the asset.
Okay.
Say if I buy a land or a house for say 50 lakhs and I pay stamp duty of say 2.5 lakhs, right? When I sell that property, the costs I will get is 50 plus stamp duty.
Okay.
Say I'm selling the same thing for 1 crore. I bought it for how much? 50 lakhs. And I paid stamp duty separately for 2.5. So my cost will be 50 plus 2.5, 52.5. So my gain will be 1 crore minus 50 lakhs minus 2.5 lakhs stamp duty also. So when you sell, you can claim that as a deduction.
So I was talking to a friend the other day and about buying a property, right? And then this whole TDS topic came into picture and it was pretty concerning, penalties, TDS and all of that. Can you throw some light on
So
that?
yeah, very good question, because there is an amendment in this also in the budget.
Okay.
Let me tell you what the rule is. Very simple, Megha. When you buy a property, right, which is not an agricultural land. For agricultural land, there is no TDS that you have to do, right?
Okay.
So what I am talking is for non-agricultural land, right? So if I am buying land or building or both, excluding agricultural land, and it is more than 50 lakh rupees, the value of that is more than 50 lakh rupees, then I have to deduct a tax of 1%, right? So if I am buying a property from you for 1 crore, I will give you only 99 lakhs. 1 lakh I will deduct and I will pay to the government in a form called Form 26QB, right, which I have to file. And the challan cum return is called 16QB. This is the technical name of that form.
Okay.
And please remember, the confusion till now was, how do we arrive at this limit of 50 lakhs? If I am buying a house from you for 30 lakhs or 40 lakhs, no, Megha, there is no need for me to do the TDS. When does the TDS come? When the value of the house that I am buying from you is more than 50 lakhs. And that is the buyer's responsibility. If he fails to do TDS, at the time of doing the agreement itself, he has to do the TDS. The time limit is 30 days, Megha,
Oh, okay.
from the date of registration. If you don't do that, there is interest, there are penal consequences, which any buyer would want to avoid.
You made it very simple for us because the conversation that we had was, pretty concerning for me.
Right.
So you just made it simple and clear now, right? So this question's coming from another friend of mine, directly from him. So his dad unfortunately passed during COVID, right? Now the property that's on his father's name needs to get transferred to him. How does that happen? And what are the tax implications on that?
So, Megha, see, there is a section in the income tax, section 47, which speaks about transfers which are not considered as transfers and which are not taxable.
Okay.
So, whenever there's a movement of title of property from one name to another name, it is a transfer and it attracts capital gains.
Okay.
But there are instances where, even though there is a transfer, there is a movement, it is not taxed. One such instance is movement from the parent to the child, right? It can either be on account of will, the parent writes a will and then he gets it, the child gets it. It can be by way of a gift,
Okay.
or it can also be by way of an inheritance where the parent has, passed away and he has not written a will also.
Right.
So the transfer of property from a parent to a child is not taxable in the hands of the child, because it is not a transfer under section 47 and it is not subject to tax.
Okay.
But how does it happen? Father is alive, he wants to gift it to his daughter or son, he can do a gift deed. In that case, when you register the gift deed, there is a stamp duty on that, which is much lesser than the rate of stamp duty that is normally there on a regular sale.
Okay.
That is one way of doing it, no tax. Earlier there used to be a tax called gift tax that is now abolished.
Okay.
Second way is by writing a will. So where there is a will that is written and the father is no more, then you take that will, provided it is a registered one. An unregistered will creates other kind of complication.
Got it.
Based on that registered will, you can get that property transferred to the name or in the name of the child. That is called mutation. It gets transferred to his name. When nothing is written, say unfortunately suddenly he passed away, like in your friend's case due to COVID, he has to go and get a legal heir certificate from a court.
Okay.
Because class 1 legal heir for any man, under the law, is the wife. So it will first go to the wife.
Got it.
Because she is the class 1 legal heir. Legal heir certificate comes to her. And then if your friend wants that property to, sell it and start his own business or whatever, it has to flow from his mother to him.
Okay.
She'll have to gift it to him.
Okay.
And again, a gift deed has to be made,
Understood.
on which there will be a stamp duty much lesser than a regular sale.
We've spoken so much about tax implications everywhere, right? Is there any property where tax is not applicable?
Yeah, Megha, in our country, agricultural income is not taxed, right? And agricultural land, to answer your question, is a property which you can purchase and you can sell without worrying about tax. That is one avenue that is there in terms of property. But it's not as easy as it sounds that you go buy agricultural land and hold it and sell it and avoid the tax. There are certain conditions, like the land has to be used for the purposes of agriculture.
Okay.
So please remember, not taxing profit on sale of agricultural land. The intention there is to help the farmer who has been using that land for agricultural activities and is then selling it. It is not for you or me to use that as an avenue for tax saving and then go buy that and sell it and, not pay tax. So the department will ask you questions. Prove to me that it is an agricultural land. For that, there are rules about how many kilometers it should be from the limits of the municipality. Not only that, there have been cases where the department said, yes, it is an agricultural land. However, it was not used for agriculture. So I am not giving you the exemption. You pay tax on that. So how do you prove that it was used for agriculture? Is the MRO has to give a certificate in which he will mention that, yes, this land was used for cultivating wheat, rice, fruits, mango, whatever. Right? So it is something where it is definitely an avenue. Like you can invest in farmlands, you can invest in agricultural farmlands. But please ensure that there is some agricultural activity that is happening there so that you don't end up on the other side of the law.
I now want to move a little bit towards loans, right?
Yeah.
What are the different types of loans?
Oh.
Yeah, and what is a decent tenure to consider? And is it a good idea to even close the loan before the tenure? Yeah.
See, first things first, what are the types of home loans? I want to be very candid here that I have no experience in banking. I only have experience as a chartered accountant. For the last 10 years, I've just been, but I've been observing the sector and I've seen so many people apply for home loans. All I can say is in home loans, there are products offered by banks and financial institutions. Always prefer a bank. Financial institutions are on higher side when it comes to interest. And there are also home loans available where you want to buy a property and give it on rent. Right? Commercial property you buy and you want to give it on rent. Even that is a home loan.
Okay.
It's not that home loan means it's only for buying a house.
Okay.
It is called a home loan even if you want to buy a commercial space and give it on rent.
Got it.
So what they do is they have a concept called lease rental based loan. So what they do is they will see the property and they will see the rental agreement, and if they see that yes, this property has the potential to get this much of rent, they will give you the loan, and when you get the rent, they will adjust the EMI and they will pay you the balance. Say my rentals are 5 lakhs, but my EMI is 2 lakhs.
Okay.
They will only collect my rent in their bank account and they'll remit 3 lakhs to me. So that way they safeguard themselves. So multiple types of home loans are there. I think the best person to ask would be a banker of any bank. But what I can say is housing loan, how long I should take the tenure for. If at all anyone's planning for a housing loan, I would suggest that they should do it as early as possible in their career, because the younger you are, the longer the tenure the banks also facilitate, and they allow you to take loans for a longer duration. Should I take it for 20 years, 25 years, 30 years? It's your outlook at the end of the day, because longer the tenure, the EMI is less. But at the end of the tenure, if you see, you would have paid a lot of interest, right? But you again compare that interest. with what you're earning in the market. And then you take that call and you go for a longer tenure. I know that I should take a long tenure if I want to save money, because the rate at which my money is growing in the stock market is much higher than the interest rate that I'm giving to the bank. That is my outlook. I will go for a longer tenure. But my personal outlook here, Megha, is I don't like to have a loan on my head. And I don't like the idea of having a loan. It's not a technical view, it's my view. I'll go for a shorter tenure and I'll be waiting to pre-close that. It may sound financially foolish, but that is my outlook. But if your outlook is you want to look at the growth, what your money is growing and the money that you're servicing, always go for a longer tenure. And try to have as many years as possible and go early into this housing loan game.
Got it. And about closing the loan earlier than the...
See, most of the banks these days, they say that there are no pre-closure charges. But first 2 years, 3 years, they don't. Say your 10-year loan and you're pre-closing it in 1-2 years, there will be some charges. So again, please read the document carefully. After 2 years, most of the banks don't have any pre-closure charge. Yeah, they don't.
Any penalties that an individual can incur in while you've taken a loan?
Oh yes, the law is very clear here. Bank loans are allowed, but cash loans are not permitted. You are neither allowed to take loan in cash, nor are you allowed to give loan in cash. There are sections in the Income Tax Act, 269 SS and 269 ST also is there, where you're just not allowed to take cash. You're not allowed to take more than 2 lakhs from one person in a normal sale, and the cash loan limit is just 20,000. You cannot take loan more than 20,000 in cash. The exact words are other than by way of account pay check and account pay draft.
Got it.
So if you ask me, can I take loan by way of Google Pay? The law is still not clear. It just says account pay check, account pay draft. But I can say cash loans are a strict no-no.
This has been an amazing session. Lot of good to know information, lot of knowledge, and I'm sure the audience also loved it. I loved it.
I hope they liked it, and in case, if they liked it, I would like to thank them in advance. And in case I couldn't clarify any of it, I'll do it. I'll try. They can reach out to you or me, and we'll try out.
Absolutely. I think it's been an absolute masterclass for everyone, because there's so much that you told us that at least what I wasn't aware of, right? Thank you so much for taking out the time.
Always.
Appreciate it. It's been amazing. But just to end it with a bang, can you summarize everything in 60 seconds for our audience?
I thought all my questions were over. 60 seconds. What all did we speak of? Yeah, I think the Union Budget 2024 on real estate, I think first things first, period of holding has been standardized, 12 months and 24 months. There's no 36 months now. More than 12 months for your stocks and shares and REIT, and for everything else it's 24 months, whether it's long-term or short-term period of holding. Then long-term capital gain and short-term capital gain also there has been a change. Long-term capital gain is now only 12.5% standardized without indexation. Earlier it was 20%, now it is 12.5%, and that is effective from 23rd July. Short-term capital gain has been increased under section 111A. It was 15% earlier on listed securities and shares, and now it has become 20%, because of which the stock market has taken a hit. And I also told you about REIT, Real Estate Investment Trust, where you can pick up units, the money will be deployed in property, and over there also the relief is that now it is brought on par with any other security, and the period of holding has become 12 months. You can sell a share of REIT and still you can go for investing in a house property, which we discussed. And then we spoke about indexation also. If there is no indexation, what is the benefit? What is the loss? I told you that the sale consideration, if it is good, if the sale consideration is high and it is good, then the new rate is better. And I also gave you an example of if the sale consideration is not so high, the old scheme is better. And then we also spoke about how the new rule is forcing me to buy a more expensive house. And then coming to TDS, I told you that as far as TDS is concerned, there is a clarification about 1% TDS, 50 lakhs joint owner. It is not each owner, it's about the overall thing. And then I also told you that gold impact, the custom duty on gold reduced, and because of that, it's a good time to buy gold and go then invest in another house, so that your dream of achieving a house for yourself is also there, and you also enjoy the appreciation in gold and the sale value of that gold. If you invest in a house, there's no tax on that, gain on that gold as well. Then we spoke of NRI taxation, that there's no major change in that, but the TDS rate is always on the higher side for that. And then I also told you about rentals. When you look at rentals, there has been a change in the law that whatever you do, any rental you get, it is house property only, it is not business income. And then we also saw in terms of rent, there is one more change for individuals and HUFs who are paying tax, who are paying rent for their own house, right? Individuals paying rent on their own house, the tax rate was earlier 5%, it has now become 2%. This is something we didn't discuss, but it's a very minor thing that I wanted to tell you. And coming to loans, at the end of the day, I told you that loans are something subjective, but cash loans are a strict no. I hope I was able to summarize everything.
Wow, this is, I think, the most educational 60 seconds anybody can have. Thank you so much, Vineeth. It was amazing.
Most welcome. Thank you very much.